Good morning. Welcome to IG's early morning call. It's Thursday, the 24th of August. Let's take a look at the headlines as we await what is likely to be the big pivot point of the entire week. It's the symposium in Wyoming, the Jackson Hole get together for central bankers. Ahead of this, we got the dollar down. The drop started after yesterday's poor US PMI data. We saw bad PMI data across much of Europe as well yesterday, and it continued into yesterday's session in the US. So Jackson Hole, definitely going to be one of the big things to watch out for. We've got yields down ahead of that as well today. Is the message likely to be dovish? We'll have to see. Nvidia, meanwhile, leading growth stocks high yesterday. It absolutely smashed forecasts yesterday for its second quarter numbers. It is the most impressive performer, and it's lifted the entire tech sector, as we'll see. And in the wake of that poor US PMI data yesterday, we saw oil prices on the way down. It concerns many that they're getting this data coming through. We'll have to see how things develop, but at the moment at least, oil on the way down. So too is the volatility. If you look at the volatility chart, yesterday we saw a relatively strong candle on the way down. One of the worst performing days in terms of volatility since the 5th of May. And indeed, technically, it's taken us outside this, what I described yesterday as a fairly loose, bearish, upward-facing move that we've got, this pattern that's developing here, or has begun now to develop because we disappeared out below the underside of this rising line of support. This is a bearish wedge pattern. These normally develop in the opposite direction in which they're traveling. In other words, this is facing up, so it's bearish. So it should, as of yesterday, we were talking about this, it should resolve on the way down. And indeed, that's what's happened. Today's candle is entirely below this rising line of support. And this indicates that you measure the height of the point at which we saw two touches on the wedge, and you project that down, which takes me roughly down to the levels not seen since the 27th of July. We'll have to see how things develop. But as I said, fundamentally, the thing that could turn this would be another really hawkish message from the central bankers over the next couple of days in Wyoming. That's, of course, what happened last year when we saw all of the major central bankers almost trying to outdo each other in the way they were burnishing up their tools to try and emphasize the fact that interest rates have got to go up and got to go up with speed, which is what was happening this time last year, which absolutely trashed the markets. We saw volatility rise on all that last year. But today, I think, very different message. MACD pointing down. In fact, we got a crossover between the MACD line and the red dotted line, which has brought us, now that's a signal line, which has brought us this little red histogram here. And that indicates to me that momentum is beginning to pick up on the downside. So the way to translate all this is that we go into risk assets again. A really good example of risk assets is the equity markets. Yesterday, very strong day, relatively speaking, on the FTSE 100, the biggest upside candle that we've seen since the middle of July. And we're building on that today. 24-hour markets indicating a stronger start, excuse me, to the trading day ahead here in the London markets. And it's the same across much of Europe as well. A strong day yesterday on the German markets. There is an underlying concern about the direction of travel in the German economy. We did see one of the measurements of manufacturing yesterday showing us, excuse me, expansion above 50 on PMI. Outside of that, it was a disaster. Service sector fears are now the service sector in Germany is in stagflation. We've got rising interest rates. We've got falling growth, or contraction, I should say. And that's most exemplified by the numbers we got out yesterday from the PMI services industry. Nonetheless, we saw gains on the German DAX and again as well on the session today, indicating a stronger start to the trading day at the top of the hour when things get underway. French CAC 40, same sort of price action. Overnight in Asia, quick run through of what's been happening there with gains pretty much across the board. Nikkei 225 up 0.4%. Hang Seng, as you can see there, easily the runaway winner in the session today's trade with a rise of 2.1% when last looked. This is a market which continues to trade on the cash session. S&P ASX 200 closing a short while ago with gains on the markets. And if we look at what's been happening, I want to take a look just at the Hong Kong index. That 2.1% you can see translating into a rise today, second day in a row, relatively strong gains. But that was away from recent lows. The lows that we saw at the beginning of this week, initially taking us down to levels not seen since the 28th of November. So don't get too carried away with it. It is just at the moment a retracement on the way up on what is otherwise a market that continues to trade on the way down, with the Hang Seng stock index really finding they're going tough despite those last 2 days of gains. Wall Street closed last night. The runaway winner in yesterday's session was Peloton, or beg your pardon, the runaway downside move, I should say, was Peloton, down 23.6% to a record low after what was a complete washout in the second quarter. People just aren't buying these cycles anymore, and the company's finding it increasingly tough to trade. S&P 500 up 1.1%, Nasdaq Composite up almost 1.6%. So you can see it was growth stocks that did much of the heavy lifting in yesterday's session. Dow Industrials up 0.5%. I want to start with what's happening with the Nasdaq. And that strong candle yesterday, 24-hour markets pushing us up with the cash session up 1.6%. Some of what happened in yesterday's trade on the Nasdaq, I'll show you the 1-hour candles. And it was this candle last night when the markets closed that was really all about what happened with Nvidia. There is no doubt about it that Nvidia is the leading chip company at the moment. It's going into AI in such a big way, and in fact, it drives the chips that Nvidia company produces, drives much of artificial intelligence around the world at the moment. And that Nasdaq was actually twisted by the amount of volume that was going through on Nvidia in yesterday's trade. So there we are. That's the Nasdaq. S&P 500, as we know, represents a cross section of stocks, but there's a lot of tech stocks in there. And it's the big tech stocks as well that are motoring. Apple, the Microsofts, the big tech stocks, the big ones we know about. And indeed, today you can see that, in fact, if you look at the minutiae, we have seen a new recent higher high, taking us up to levels not seen since the 15th of August on the Dow and the 24-hour market. So despite, that's the S&P 500, I beg your pardon, but the same sort of picture there for the Dow Industrials. You can see a very slim candle, fractionally taking us up to levels not seen in a couple of days. But the broad sweep is we got gains across the board on Wall Street in yesterday's session. I do want to show you the Peloton chart because, as I said, for no other reason other than the fact it is in a very dark corner indeed. This black line here at 646 is the previous low, record low that we had, which was the 11th of May. And that stock was then down 96% for the record highs we had after that push up higher during the lockdown. IPO price $29, currently trading at 544.5, or rather as at the close, extended trade late last night for Peloton. Now, the Federal Reserve's central banking meeting gets underway in Jackson Hole, Wyoming later on today. We've been on about it all week, and I think it's worth just highlighting exactly what the big pivot point might be when we're looking at the markets and the trading on the rest of today and tomorrow, when we get the big statements coming through. Will it clear the air for the markets in terms of where central banks are going in terms of interest rates? Yields and the US dollar are falling ahead of the start of the symposium a little bit later on today. I want to begin, first of all, with a look at what's been happening with the US dollar. Now, don't get me wrong, that this drop that we saw yesterday wasn't about the fact that people are expecting a dovish message from Jackson Hole. It was all about PMI data. But I think certainly some of what's happening in the markets with yields down and the dollar down a little bit on from the highs that we saw yesterday, it might give some hope to the message that the worst of the global inflation shock is behind us. But what may come out is that while the corner may be in sight, it has yet to be turned. And we'll see some of these central banks continue to keep interest rates high. We know that from market expectations, we know that there is the expectation that the European Central Bank is going to continue with its foot on the pedal. It was a very different story last year when central bankers were fighting runaway inflation. The message was that their respective feet were firmly on their local accelerators. Now it's the balancing act of ensuring inflation seeps away in the hope that it doesn't kill what little fragile growth there is. In yesterday's trade, we went below the total retracement of this fib, in meaning that the euro was weak enough to pull back. Then came the fight back in the euro, not because of the euro up, more so because of that drop we saw in the dollar yesterday. So we're back now above what is this line of support, taken down from the fib, from the lows we had back on the 6th of July at 108.34, currently trading at 108.57. Where we go from here really does depend very much on what comes out of that symposium. I want to show you another big cross where we've seen now, as of today's trade, ahead of the start of the Jackson Hole speeches, we've got a third day in a row of losses for sterling against the US dollar. So it really is a question of where you see the markets and how you think this message is going to be perceived in the markets. We get the big speech tomorrow on Friday coming through from the Federal Reserve Chairman Jerome Powell. Now, ahead of that, we've got some economic data out today. It's not going to blow the socks off the FX trades, I don't think. The initial jobless claims at 1:30 p.m. today, UK time. Economists seeing 240,000 new claimants last week. And durable goods orders, very volatile number, expected to fall by 4% in July, month on month. I won't show you the foreign exchange markets again ahead of that, but I think it's just worth watching at 1:30 today, and we'll get some news coming through. Angela Barnes will be with you at 1:30 on Beat the Street. Hope you can join us there for that early morning call for the US markets as we see, and trying to set you up for the day ahead as we see the day ahead unfolding on Wall Street. So let's now take a look at what's happening in some of the other areas of the market. I want to take a look at a couple of the big stories that are developing on the markets, the corporate markets. I want to show you the chart for Hayes. This is the recruitment company. Had a big couple of days over the last couple of days on the upside. And I think whether or not anybody knew what was going on, I'm not entirely sure. But Hayes has come through with a really interesting full-year update this morning. Where I was highlighting this in the look ahead yesterday. Record fees from Hayes up 6%, driven by a good performance in temporary, up 9%. Permanent staffing up 3%. This is the problem. The messaging coming through from companies is that there is hiring, but it's temporary, not permanent. But in fact, what Hayes does is it actually manufactures a really good result out of that. It recorded a profit before tax of £192.1 million. Net fees reaching £1.25 billion. The group declaring a full-year core dividend of 3 pence per share. Hayes also announced the appointment of Dirk Hahn as its new chief executive. I want to show you the long-term chart just to show you from where it's come, with the markets up on the beginning of June 2021. All the way up at 178 pence. The stock will open at 103 pence today, and I think this does look good, but I think in the context of what we've seen over the last couple of days, is there much more upside to go? I'm not entirely sure. So we'll have to see how things open at the top of the hour. Now, after the market closed on Wednesday, Nvidia stole all the headlines, all for all the right reasons. It reported an 88% jump in revenue and topping its earnings estimates, as results for the second quarter were driven by demand for artificial intelligence chips. AI is the word around Nvidia, and oh boy, it laid it out in spadefuls. Nvidia's performance was driven by its data center business, which includes the A100 and H100 AI chips that are needed to build and run AI applications like ChatGPT. I think we've got a chart here showing you what happened. Nvidia reported $10.3 billion in data center revenue, which was up 171% on an annualized basis. Earnings per share, you can see there blowing the doors off. We were looking for around $2.09. We got $2.70 earnings per share. Revenues coming through, smashing estimates as well of $11.25 billion, $13.5 billion of revenue. That wasn't all either, as the business said it expected third quarter revenue of around about $16 billion, higher than the $12.6 billion forecast by Refinitiv. Analysts say this suggests that its sales will grow 170% on an annualized basis in the current third quarter alone. Now, I want to show you what happened all sessions on the stock late last night. Nvidia had already been up 267%, or in fact to the highs after the reported numbers last night, 267% so far this year alone. And you can see, in fact, it was lower than that to begin with in October last year, so even adding more since October last year. Now, I've drawn this box here on the right-hand side just to show you what happened with the stock up a total 13.22%. It closed all sessions on the IG platform off the highs, but nonetheless up 9.6%. The volumes here were enormous, and Nvidia rising to that record high, and it absolutely will steer the direction of travel at the start of today's trade on the markets when things get underway on Wall Street later on, and it will definitely give a boost to the Nasdaq on which it trades, and it's helped a lot of other stocks as well in the artificial intelligence area. Outside of that, a quick look at what we've got in terms of some of the news headlines today. There aren't any all-session stocks to watch out for. Before the market opens, we're getting numbers out today from Dollar Tree, the discount store. The street anticipating earnings of 87 cents a share, roughly half of what it earned in the second quarter of 2022. Revenue forecast to rise around about 6% to 7.18 billion, but same-store sales are expected to continue to shrink. I will show you the chart. As I said, it doesn't trade all sessions, so there's not an opportunity to trade this ahead of the open. I think it could well be a mover today, especially if we do see further downside possibly to these numbers. Yesterday it closed at $142.28, watching that, and we'll pick up that as well in the 1:30 p.m. IG platform release of Beat the Street. Hope you can join us there for that. Angela Barnes and I will be talking to you about some of the stocks to watch. Another stock to watch will be Gap. The clothing retailer comes out after the bell for its second quarter numbers. Second quarter fiscal 2024 revenue forecast to come in at 3.58 billion. Now that's down 7% on the same quarter this time last year. Analysts also are seeing adjusted earnings per share, excuse me, of 10 cents, up from just 8 cents in the same period this time last year. Again, Gap is not an all-session stock. Yesterday, it hit lows in the market not seen since the 25th of July. Interestingly enough, it did actually close out this gap. Technically speaking, when you get a gap like that, it's a sort of itch on the back of the hand. You just can't resist scratching. But it has actually now closed that, which is good news, because otherwise that would have remained a little bit of a sore for technical charts to close. We've got that closed. I think that now ends that little bit of a story. But significantly, in the last couple of days, it's fallen below this rising line of support that we've got, which gave us the launch off for that gap to be established. So that is now over. We'll have to see how the company performs. I think those numbers are, as I say, out after the bell. Now let's move on and take a look at some of what's happening in the market. I want to begin first of all with the WTI US crude on the IG platform. Yesterday it disappeared below this line of marginal support at 78.54, then recovered, which is not too far away from where we're traveling at the moment. Oil prices on a downward trend yesterday, weakening as the PMI data was released in Europe and more notably in the US. Then US crude oil inventories gave WTI a temporary boost, and you can see we were off the lows in yesterday's session. Crude oil falling last week due to an increase in refinery processing. That's crude oil inventories falling. According to the EIA, inventories fell by 6.1 million barrels despite an increase in crude oil production, which rose 100,000 barrels of oil to 12.8 million barrels of oil per day. It's highest since March 2020. Let's go back to the charts. I'm going to show you what's happening with Brent and set up a trade on this, that we are now got an entire candle below this nominal line of support at 82.88. Now, the next line of support to watch out for are the lows that we had down here at 78.13. That was in the middle of July, and that for me is the next price target to look at. We will go below the $80 a barrel level if we do get to that sort of level, and that also coincides around about the 200-day moving average. But moving averages coming up below where we are, which will have to be passed in order to get down there. But look at the direction of travel on momentum, very much on the way down. Stay on the charts. Just wanted to update you as well on what's happening with some of the metals. Big news yesterday for the price of gold, storming past the 200-day moving average. 1921 is where we're trading there at the moment. Highest trade we've seen since the 10th of August. But I think more importantly, we got money going into some of these base metals. Yesterday, a continuation of the recent rise we saw in copper. A little bit of money down there at 84.08 today. But other base metals doing well. We were talking yesterday about iron ore. Today on the way down, but yesterday hitting levels there not seen since the 3rd of April. And some of the other market moves as well. A little bit of an easing back on some of these. In fact, nickel up for a second day in a row at 209.32. That's it from me. Watching out for haze at the start of the day's trade when trade gets underway at the top of the hour. Looking for gains across the board in European markets at the start of the day's session, but haze is the only one with any numbers to report, which could well move its little corner of the market. It is only a FTSE 250 company, so it is relatively small in the grand scheme of things. But I certainly think that today's swing point or pivot point in the market will definitely be the beginning of those central bank speeches at Wyoming for the Jackson Hole symposium. We're back at 10:30 for Charting the Market.